Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Today we're going to talk about everybody's favorite fruit company here, Apple. It's the Apple event week, and no, everybody's going to have their eyes on it. Personally, it's a name we've been looking to reload. Uh, we'll get into that about the trade on earnings recently, but we've been looking to reload, and really, the major question here is: does getting involved before the event make sense? So let's talk through the reasoning behind this. Um, First things first. I'm not going to get into the products launching, or the redesigns, or the prices, or anything like that in this video. It's really just going to talk about the technical setup, and really even more so the option angle of the event, obviously, because it's options in play. So Apple had this really great breakout through 192, 193 resistance earnings, just powered higher, hit the trillion mark, paused a bit, and then had this secondary move up into the 213 to 215 range, which was actually it was basically our more aggressive target through this breakout. It's because that was a 10% measured move. Like the 200 area was first, and then the more aggressive secondary target was the 10% measured move, which put it at uh, right around like 213 ish in that ballpark. So when it got to that second target, the trade was closed out. Clearly, it kept running. So we missed out on some of the upside. Ran all as high as like 230, and then it's pulled back real sharp into the 20 day. So typically like this move here into the 20-day would be interesting because it's the first test of a pretty key moving average since the stock reported earnings. Plus, it's down a few days in a row into a big moving average. Top name, like we talked about in last week's video. A top name pulling back to keep moving average. Like these are the names you want to go to. When the market pulls back, because these tend to be the names that bounce back first. The thing is, the Apple event is obviously a catalyst for the stock, and the question is taking risk into the event worth it? And right now, the Apple options at the time of this video, we're pricing about a 6.25, so 625 move for this week. So that's this week's straddle. Next week's straddle, so the 21st expiration of September, is pricing in roughly about 850 to 860. So you can see that most of the current price of near-term options is this event, because six and a quarter for this week, 850, 860 next week. So you can see that a good portion, you're only paying like an extra $2.50 for next week's options at time value. So you can see that about 75% of that really is like this catalyst. So expectations. I don't want to say expectations are necessarily high, but the options are trading elevated. So the implied volatility on the September 14th contracts is elevated. It's around 34, 35 implied volatility versus historical, which is closer to 28. So the implied volatility is a little bit higher, and when you take into context what Apple has done on its recent event days. So let's go back and see. So implied volatility is a little bit higher. Let's say like they're looking for about 6.25, right? The Apple options. Like if we go back to last year, you can see from the Friday before the event to the Friday after. So for like a week stretch, Apple moved net, give or take about $1 in 2017. From the Friday before to the Friday after the event, give or take. Roughly in that ballpark. And then if we go back even further, so 2 years ago, Apple, a little bit more of a move, but still, it was actually less than that. So it was from the Friday before to the Friday after was about moved about $4.50. So in both cases, the stock actually moved less than what it was pricing in at the moment. So, that doesn't mean, because I mean, obviously the stock was less expensive then, so it doesn't mean that Apple can't move. But I guess our opinion of it at this point is that options are a little bit expensive. It hasn't really demonstrated recently that it has huge moves on these events. And when you couple that with the fact that the stock is it probably more than like a bounce or a drop, it's most likely in need of a pause or consolidation after this recent move. I mean, 10 point. I mean, for a stock like Apple, you know, it doesn't tend to be this volatile for this long of a stretch. So when you have like these really sharp moves, like like back to back, basically like 3 weeks in a row, you see like these really sharp moves. I mean, our opinion is that more than anything, the stock is probably due for a pause or a consolidation. So, even though we like the technical picture, the way it's developing, how top name pulling back to a 20 day for the first time. I mean, that's an attractive entry. The problem is options are a little bit more expensive, and the stock probably is in need of a consolidation. So we aren't as interested in laying out the premium into this event. Um, that doesn't mean we're not going to be interested after the event. So, you know, it's the stock is acting great. It's just it's comes down to like the pricing dynamics of the options, right? So, if say Apple doesn't move as much as the market is anticipating, regardless, you would expect the implied volatility of the Apple options to contract after the event because the catalyst is out. So, you know, from a longer swing perspective, you don't necessarily, if you don't have confidence that it's going to have a huge move on the event, then your better bet is to wait until after the event because you should see an implied volatility contraction, and options should be trading at a discount. Assuming it doesn't have a huge move, options should be trading at like a more of a discount, and it's a little bit better opportunity to enter a longer term swing because you're not paying for that near term catalyst. So that's kind of how we are approaching it. We like to we like to see like a consolidation, implied volatility come back down a bit, and overall though, I mean, still bullish biased. Think that the stock could continue higher, and we like a swing, maybe out through like next quarter's earnings. But in terms of the event this week, we're most likely going to be on the sidelines. So just to kind of summarize, if you're looking for a trade, calendar spread, so something that takes advantage of higher near-term volatility, to offset like a longer-term position seems kind of interesting, or really just waiting until after the event and waiting for that implied volatility contraction could be interesting plays for the event this week. So traders are back to their desks after summer. I mean, we should expect the volume to pick up. Biggest company in the world has their event this week, so there'll be a lot of interest in that. Plenty of things going on. More trades coming your way. Again, we love to hear from you. So if there's anything you want to hear in these videos, or questions, comments, definitely reach out. Have a fantastic day, and talk to you soon.